Hello ladies and gentlemen, welcome back to Dre's YouTube page. Thank you all for tuning in with me today. Today's video will be a continuation from the video that we released yesterday. In yesterday's video we went over how to properly chart using TradingView, and we charted the Walmart stock ticker symbol WMT. Today what we're going to do is actually identify some things that we see in the Walmart charts. I'm actually going to show you a little bit of money I've made on a Walmart contract today, but I'm going to explain to you the reason why I participated in that trade. So as you see right here, our chart looks just about the same as it looked once we finished charting it last night. Anything that I added to the chart throughout the day, I deleted so that I can go back and show you guys exactly what it is that I did. So hopefully it will help you, on your charting journey. All right, so we are on the 1 day time interval, and zooming in, you see that on today we have a green candle and this right here is called a doji, to where basically that symbols that the buyers and the sellers were neck and neck majority throughout the day. However, the buyers did overtake the sellers just by a little bit, because you can see that the candle closed higher than we opened. So we're going to zoom in to say the 4-hour chart, and the first thing that I want to show you all is well, actually we're going to talk about liquidity levels. This is something that I didn't talk about when we was doing our charting yesterday. Liquidity levels is something that when I am updating my charts is not necessarily a part of my process. However, when I am trading, identifying my liquidity levels is extremely important, and it's something that I always try to make sure that I do. So on this chart we have some perfect examples of some liquidity levels that I wanted to show you, and this will actually lead to a setup that I'm going to share with you all. And if you are an options trader, or if you are familiar with swing trading or with leap trading, please, by all means, feel free to take advantage of this. However, disclaimer, I am not a financial advisor. I am not advising anyone to invest their money in anything specifically. I am just sharing some of the tools that I am utilizing and the things that I am taking advantage of. Once again, guys, we're going to keep it raw. No cuts, videos going straight through. So, with that being said, we are going to identify this liquidity level that we have right here. And so we're on a 4-hour chart. And what I want to show you all is, if we look at where we closed at today, which was at $155.88. How you doing, love?
I need some of my water bottle.
Okay, you need some help?
No, water. Okay,
baby. All right, excuse me, guys. Once again, we keeping it raw. We're going straight through, no cuts. So with that said, back at the liquidity levels, you see that we have this long wick right here that came down, that bounced off of that support line that we drew yesterday. And so what this tells me is that as we was approaching the support line, I hope a lot of buyers were buying in. But when we look over to the left right here and we see these same wicks, how it came down, this tells me that this is a liquidity level. This is a level that whenever we enter this space, a lot of buying and a lot of selling is taking place. People are jumping in to ride the stock back up, and say vice versa, once we zoom out, you see right on the other line of that support line, right on the other side of that support line, we have more liquidity area, but this is more so for the sellers, where sellers are taking their profits. And so we see that both sides of this support line is extremely vital, and so it's extremely volatile as well. it's a lot of liquidity. It's a lot of buying and selling taking place. So what we want to do is we want to create, or we want to identify this on our chart so that we are aware of it. And I'm just going to start this rectangle from the bottom, right where the candle, the wick separates from the actual closing on the candle, and we're just going to drag it across. And this, I would say the liquidity level, I would drag it to the end of this wick right here. I would bring it this far over, and this is I'm going to leave this rectangle green, and the reason why is because whenever we hit this area, buyers are stepping in and they're buying this stock up. And so as you can see today, once we came down to touch the support, buyer stepped in, bought it right back up, shot the stock right back up. So we're going to put this here, and this liquidity level is active until we break through it. You're welcome, love. So with that being said, now I will share with you all what I did, and we'll zoom in on the say the 15-minute chart, and I will share with you all the play that I took on Walmart today, and I'll also update you on what I still see taking place with Walmart. So I will put a screenshot of this on the camera. You see that I had 3 contracts of $170 Walmart call. For those of you all that are not familiar with options, basically I spent $35 per contract saying that I believe Walmart is going to go up in price. Specifically, I'm saying that Walmart is going to be at $170 or above by the 19th of January 2024. However, I don't have to hold this contract until it reaches 170. If I see profit, I take profit. Now, I do have a feeling that this stock definitely has potential to be back at $170 by January. Let's see, if we zoom out, we see that we just came off of a high of 170, which is where we just fell from on the 15th of November. And so just last week we were at that point. And so yes, we can go back there. However, the stock market is a game of chess. Never expect a stock to just go directly to any point. No matter how well you think you're tracking it, still expect the long route, expect the delay. So with that being said, once these contracts got up, I bought them once again at $25 per contract, bought 3 of them. They got up to $35 per contract. That was a 40% return. As much as I wanted to hold on to the play, I had to take those profits because I would be beating myself up if I was to have lost out on those profits. However, I actually jumped in that play more so just to have eyes on the Walmart calls, because this is a move that I'm tracking. However, I wasn't expecting it to fully execute today. So with that being said, let me tell you what I am still seeing with this. Well, actually, let me explain to you when I got in it today. We're on the 15-minute chart. We're zooming in, and you see that we hit down here at 154.13 to be exact. And at 154.20, I can zoom in on, say, the 1-minute chart. What I do is I make these little circles whenever I buy into a stock right here. Once we bounce off of this liquidity zone at 10:40 this morning, I saw it. I was waiting to see if we was going to fall anymore. And then at this point, once the contract hit $25 flat, I figured, all right, well, let me just start to piece in it little by little. So right here at $154.19 is when I started, or when I actually bought all 3 of those contracts. And as you can see, it was just about perfect timing. I wish I could do this all the time, but Yeah, and then fast forward, we come up, and right here, this second green circle is where I sold at $156.38. And as you can see, that made me a 40% return. And so, with that said, I showed you an example of a liquidity level for buyers. Now let's show you an example of a liquidity level for sellers. Going back to the 4-hour chart, we zoom out and we see right here, which I think it'll show better on the 1-hour chart. That's something else to keep in mind, guys. Definitely check all of your time intervals. You know, it doesn't hurt just to slide through them. For example, say if I am looking for supply and demand, or even liquidity levels on a smaller time frame, say the 1-hour or the 1-minute chart, the 3-minute charts, 5-minute charts, I can still find liquidity levels. However, on those smaller time frames, chances are they're not as strong, so don't expect something as drastic on the smaller time frames. No different from finding a head and shoulders pattern starting to form on a 1-minute chart versus head and shoulders forming on a 4-hour chart. You know, that 4-hour chart, you're going to see a lot of price action taking place versus on that 1-minute chart. So with that being said, on this 1-hour chart right here, zoomed out, on the 17th of November at 0930 and at 1030, you see that we came up to this, what is that, 157.34, and also that 157.54, and we sold off pretty heavy. And something that I want to point out right here, this candle that we're looking at 1030, this is what you would call a shooting star. This is whenever a candle shoots up to a high price, and then majority of the people in the stock sells off, therefore causing the candle to leave that wick at the very top, and then the body of the candle closes at the very bottom. And so that's called a shooting star. The reason why our shooting stars normally indicate if they take place during an uptrend, it's that's like one of your clues that you have that a reversal is about to take place. It's not 100% guaranteed, so if you see one, do not automatically start to jump the reverse, but just know that chances are the momentum is about to slow down, or excuse me, chances are the momentum is slowing down or a reversal is taking place. However, once again, the stock market is a game of chess. So this shooting star, your first thought will be, okay, we're about to start dropping, and then you tune that shooting star out. Meanwhile, that shooting star left us a big hint. It left us a hint that we got a bunch of sellers, or many people are taking profits whenever we hit this point. And so with that being said, I'm gonna draw a rectangle. Ooh. I will correct that, but we're gonna draw another one, and this one we're gonna make red. Reason why is because when we come across these wicks, this area right here from 157.54 down to 156.75, a lot of selling took place. So this showed us on Friday the 17th of November, this liquidity level. Fast forward to today, we hit this level at 130, and you see that we rejected off of it, and now we're coming back down. So keep in mind, let me zoom in. I'm gonna zoom back in to show you guys where I sold at, so you can kind of see why I took my profits. Right here, you can see that green circle that's in the background, which if I go back to my, say, 5-minute chart, you can see it. I sold right once we hit this 200 EMA, and we was also approaching that high liquidity level. And so I figured chances are we're going to either reject hard from it, or you know, we can make it over it, but typically off of a strong move down like this, the first momentum we get up, unless we having that V-shaped recovery, don't necessarily expect us to surpass those resistant levels on the first time. All right, ladies and gentlemen, so what you all been waiting for, this is my game plan of how I will be watching the Walmart stock and how I will be trading it. Overall, I am expecting us to retest Walmart's highs, which is at that $169.94, $170 level. It's, you know, it's no guarantee when it's going to go back to test those levels. It can go back to test those levels in the month of December. It can take, you know, 6 months to reach those levels. We can continue to fall. However, because we have confidence in our charting, we have our trend line that this stock has been respecting very well. You see that we're approaching that trend line again, and we still have not broke the trend line. We came down, we hit the support, we respected that support line. And so zooming in, I don't like to put predictions on stocks because it kind of gets you narrow-minded, and you know, it keeps you from being open-minded and keeps you from being able to adjust quickly once things don't go in the predicted way. So with that being said, what I like to do is I like to lay out a game plan for both sides. If we continue our bounce from here and we do get over this liquidity level and we start to feel that gap, okay, there go our rad up. At the same time, what type of resistance, aside from this liquidity level, what levels are we looking to get over? So what I do is I will zoom in to say the 15-minute chart, and what you want to do is basically look left for everything. So from where we currently are, our first level of resistance that we're going to come across is this liquidity level. We have to get over this. However, you know, I've seen funny things happen in the market. To be honest with you, a lot of the times whenever you come across your biggest trends, the market like to gap up through the night. And so don't be surprised if tomorrow, or not this stock, say for example, but some stocks, you know, you'll see that the next day it'll gap right over the resistance levels, and it will continue on its way up. However, if we do gap over that, our next level of resistance, scrolling up, basically we're going to look left and we're looking at these underbellies. That's it. These underbellies. Everywhere that we bounced at as we was going up in that channel, that's going to be some type of level of resistance. And so I can take a trend line, and what I do in this situation is, instead of putting it by this long wick right here, I'm gonna put it right beside where it's double wicks, because we consolidated a little longer in that area. And if you bring this line straight across, that tells me that as soon as we get over this liquidity zone, our next line of resistance will be this 158 level. And then, same going up, you could just clone this trend line, and we're going to put the next one right here. Expect some resistance at this $160 level. And you could play this stock from level to level. All right. Same to the downside, we have our buyers stepping in right here. So if we come down, if we fall through VWAP right here, we're expecting to get some type of bounce right here. However, if we was to fall through that liquidity level, let's zoom back out. We'll zoom out to the 1 hour chart. All right, and once again, we're just going to look left, but vice versa. Instead of looking for underbellies, let's look for some peaks where we struggled to get over. So for example, right here, this mountain peak at $151, expect us to come across some support right there. All right, so with that being said, the swing slash leap options that I want you guys to keep an eye for is the $170 calls for Walmart. Do not rush into them, and definitely give yourself a lot of time to allow the stock to play out. So with that being said, I like to personally, it's to each his own. Everyone's risk level is different. The play that I was in earlier today, those was $25 a contract, and so my expiration dates were in January. So I had basically a 2-month window expiration date on those. Normally, if I'm investing a lot of money, I'm going to be a lot less risky, and so therefore I'm leaping in that case. You know, I want to go about a year out plus. Stay tuned for our next video. In the next video, I will talk about how to utilize indicators when trading. I will show you guys some of the indicators that I use when I'm live trading, when I'm day trading, how I plan my executions, how I jump into my plays, and also when I exit my plays. Remember, I am just here to share my ingredients. It's up to you to build the recipe for your own life. Don't forget to like and subscribe and hit that bell if you would like to get alerts for any videos in the future. Thank you all for tuning in. I really do appreciate it. I will continue to bring you back-to-back content as much as I can. Peace, love, happiness.